Are you aware that crude oil and wheat prices are down by 9%, natural gas by 19%, corn by 13%, and cotton by 5% this year? At the same time, unlike oil and agriculture commodities, metals, especially precious ones, are surging. Prices of gold are up 32%, silver 40%, copper 13%, platinum 60%, palladium 29%, and rhodium over 50%. But why? Namaste. Crude oil prices, along with those of agricultural commodities, remain depressed. To understand this better, let's look at what Erik Norland, Chief Economist of the CME Group, said at Soy Connect 2025 in Washington. He shared some interesting observations on the commodities market. Here are some of the highlights. According to Norland, crude oil prices are depressed despite oil tankers taking a detour to avoid the Red Sea and Suez Canal in view of the geopolitical tensions. Traffic via the Red Sea and Suez Canal is down 85%. Agriculture markets are closely linked with crude oil due to the energy-intensive nature of agriculture and biofuels. Vegetable oil prices are also closely linked to crude oil. Despite geopolitical tensions, crude oil prices remain remarkably low. One reason could be that oil cartel OPEC has begun to increase production after having cut it over the past few years. On the other hand, advancement in technology in the automotive sector is driving crude oil demand low. The average fuel use is currently half of what it was 50 years ago. Vehicles are becoming approximately 3% more fuel efficient every year. People are driving the same distance they did in 2019. In China, EVs accounted for 51% of the total vehicles sold in 2024, according to industry reports. In addition to these reasons, the cost of lithium-ion batteries and solar panels is decreasing. Demand for electricity in the artificial intelligence industry is increasing, though. More importantly, crude oil prices are following Chinese growth with a year's lag. The prices of wheat, corn, and soybeans lag Chinese growth by 12 to 18 months. This is because Chinese debts have grown rapidly since 2008, higher than in Europe or the US. This has affected its real estate sector, which has a 30% share in Beijing's economy. Industrial output and consumer spending have dropped. Retail sales have dropped by 10 to 20% in the past few months. Prices of wheat, corn, and soybeans appear elevated, partly due to a weakening Chinese currency. This has been caused by People's Bank of China's interest rate cuts. All these have resulted in Chinese growth being affected. In turn, it's reflecting on the prices of crude oil and commodities. Then, why have prices of metals, mainly precious metals, increased sharply? People are looking for a safe bet for their investments. They see metals such as copper and almost all precious metals as a haven for growing their money. Also, storage charges for metals are far lower compared with agriculture products. So, that's why we see a rise in the prices of copper and precious metals. That's it for now. Keep smiling and be happy. This is Subramani Mancombu signing off until we meet in our next episode. Bye and good luck.